The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, as we start yet another trading adventure. Yes, our humble listeners, a trading adventure on June 5th, one day before D-Day. And I'll see if I don't have time. Maybe I'll put together a special D-Day edition of the Power Trading Hour. Not much trading happening during the war, though, but we've talked about it. Anyway, we've got a market that is decidedly higher, and we're going to talk a little bit about that today. For the most part, our friends in Europe, especially Mr. Draghi, had been pretty much mouthing a lot of stuff, not really doing a whole lot, trying to jawbone the market higher and avoiding actually any heavy lifting. There is a great deal of problems with doing heavy lifting in Europe, mostly because even though Germany lost the war, they won it in the end. They own about 80% of everything in Europe. I was always shocked. I went over there in the 90s with one of my partners who was English. His name's Keith. I always had an interesting turn of phrase. Very, very smart guy. Big cheese at Scientific Atlanta. And one of their best engineers. He was part of the brain drain that moved to Canada, along with just about everybody else that was in the company. I think we were two token Americans out of the rest of the company. But almost all of them had held or been in Europe, one from Portugal, a couple, 1, 3, 4 from England, one from Lebanon. Basically, if you couldn't keep your money and work hard, they decided to take off and go to Canada and start their own little company or work for Scientific Atlanta at the time. But I digress again. I'm going to digress again. Anyway, the whole point is when we got to talking about what was really going over in Europe, every time we'd go do something, it was always some German banker that was always holding up some big deal for a television station. Even money coming through for the BBC was coming through a German bank. Talk about nutso. Interestingly enough, I guess he finally got the Germans to cooperate a little bit. There are a couple of things that are on my mind today. One is I have a model. Model doesn't work all the time, but models are like maps. They give you a good idea. If you see a turnoff and there isn't a turnoff there, you don't turn off anyway. The map, as they say, is not the territory. But my model basically has one big caveat in it, and that is when you get into the 90s, whether it's 900 on something, 90 on something, or 9 in something, we live in a world that ends in 99 cents, or at least in the United States. All the people in Europe always looked at me strangely. They never could get the whole 99-cent thing going, but it is psychology. I've read several studies on it. The reason I've been so interested in it is I saw an article somewhere in the mid-2000s about the propensity for stocks, indexes, just about everything in the stock market to behave like 99 cents. That is, it's not $2,000. It's $1,999. And that isn't $2,000. And the amount of sales is measurable by putting a $2,000 price tag on something and one that's $1,999. We've talked about the prices of free on this show before, and I'll try to review it. Maybe we'll bring it up in the second B block today. But the whole idea of the way you price items, and maybe it's an American mentality, but it's been tested so many times what works, and that is $19.99 or $1,900. And how many less are you going to sell if it's $19.99? The answer is about 1% less. It's almost negligible. So cars always end in $19.99, everything else. Now, the question is, are you closer to that century, closer to the 9 mark? And if you just hit, let's say, 90 on a stock, it has probably about a 65% chance it's going to hit 100 if that's the first time up into that area. If it hits 93.50, that goes up another 15 or 18%. And those stocks and commodities, I'll have to go back and see if I can find that article. But basically, once we hit 1935 today on the S&P cash, we held it, even though the volume isn't all that great. Or in fact, we're under 2 billion shares, but the volume's better than it was yesterday. I pretty much had to say I would capitulate on the at least short-term bear side and say that we are more likely to hit 2,000 than to hit 1,900. And I suspect all the work I've done on individual stocks and indexes, I remember I'm pretty much one of these guys that if someone tells me something, I've got to go out and test it. And at least in the 2000 area, when I'd gone back 50 years in the stock market, a huge propensity for that to happen. If a stock's $9, about 80, actually, if it's $9.35, it hits that, it's about 80% chance it's going to touch $10. If it is below $9.35, you still have a 65% chance. So once you hit 9, you might as well bet on 10. The odds are with you. And of course, now I'm looking at this way as we have an 80% chance of testing 2,000 on the S&P cash. I also say that the character of markets tends to vastly change into 3-day weekends. And I think this weekend we know exactly, or this week we know since the long weekend what we have. Market's going to crawl higher. Today, probably a big day with 12 points higher on the S&P cash. Now, could we pull back a couple of days on 2, 3, 4 points? But my guess is we go up 2, 3, 4 points, and then maybe 8 points, and then maybe pull back a couple of points, then go up 8 points. But my guess is by the time we roll around to July the 4th, we're going to see an S&P cash at somewhere around 2,000. And if nothing severely changes, I can see that they would hold this up through the Alibaba IPO, and we may not have a lot of volume. Now, generally, the way, in fact, I did a lot of research last night because I couldn't go anywhere. I had to skip out yesterday because I got an ear infection. The ear infection made me feel like I was on one of those spinning teacups at Disneyland. I had to sit there and spend the remainder of the day laying on the floor or on the bed watching a tablet, watching the quotes because I was spinning so hard. In fact, I was spinning about halfway today. But I pretty much already knew that my model was telling me once we got to 1935 that probably being short for the at least next 3-day long weekend in July 4th weekend or long week were probably a fool's errand. We didn't need a lot of volume. We're going into a section that didn't have a lot of volume last year. So the comparisons are going to get a little bit better. Plus, I've seen a lot of stocks that probably should have cratered actually pop and do very well last couple of days and execute some fairly big short squeezes. That tells me that there are still shorts in the market, and normally these markets will not fail until the last short is given up. I suspect that we're probably going to see a summer of slightly higher prices in the indexes, and probably I'm going to probably ignore indexes, I think, for the rest of the summer unless something major happens, and just focus on individual stocks. Some of the things I've been short have been gone a little higher. Some of them have gone a little lower and faster. So there are still opportunities to be short. There's still opportunities to be long. I have covered all but one of my shorts, and I'm going to be watching that one. We'll talk about it. Probably going to cover it here. Let me take a quick look at it. I think I'm probably going to cover it here during the next break. And we'll talk about that stock too. Some of them I've won, some of them I've lost. And it is going to be tough to give back some money to the marketplace. Thank God it's not a lot. And thank God that I have more than one position. So mentally, I'll have a good attitude, even though I'm probably on net, I'm down a little bit. But I'm not going to whine and or scream. What can you say? Had some big wins. I'm going to give a little bit of that back in this cycle and get ready to go and have yet another cycle the rest of the summer. We're going to talk about what that is and during the current break. In the meantime, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and or you can post a message in the den. Now, I imagine the question is, what is the change this morning going to mean? Negative interest rates in Europe. I suspect all that cash is coming here. I think there isn't a great deal of it, but what there is probably going to be exiting stage left in Europe and probably coming over here for safety, and some of that's going to go into the equity markets. I think a great deal more is probably going to go into the treasuries. So we could see a great deal of what we're looking at. Kind of surprisingly, you would have thought that the dollar index would have continued up today. It is not. It's down 30 cents. That's another good indication that we're probably going to see a market that's fairly tough to have a huge move up. Now, playing individual stocks probably going to do okay. Two, you would have liked to seen about a $30 move on gold today. We're up about $10. And that also tells me that we're probably in a slight to upper bias in the markets, at least through the first part of July. And I would have liked to seen crude bust today. And that we've got, where's crude up here? Off 30 cents. Also tells me that the market's not going to buckle anytime soon, with 30% of the S&P cash being energy related. I wanted to see this thing. It was down $1.50 earlier. I wanted to see crude below $100 today. That is not going to happen. So I think we've got a market that why we're going to have light volume, probably setting up a blow-off top sometime in the future, is more likely to see a movement like 2000 and the dot-com highs than sell out right here. Now, that doesn't mean we're not going to have a wild trading market later in the summer, but I have a feeling we're going to have a very narrow market here shortly. Anyway, we'll be back in just a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, you had a comment in the den that as we drift higher to S&P 5,000 this time next year, all on decreasing volume. My guess is that we will not. That we will see some kind of volume come into this market as it gets higher. The market's always great at getting the most amount of money in just before it rolls over. And I think we're going to go up until we see Joe Sixpack and the taxi driver deciding to get into the market. And there will be volume, and they will get in at the top. They just have to. It's not like they can't. This day in 1947, in one of the most significant speeches of the Cold War, Secretary of State George Marshall calls on the United States to assist in the economic recovery of post-war Europe. His speech provided the impetus for the so-called Marshall Plan, under which the United States sent billions of dollars to Western Europe to rebuild the war-torn countries. I just think it rather poetic that we're probably, or they are starting to, with the negative interest rates, probably see a lot of cash exit stage left in their markets, and probably head on over here, because my guess is you can, if you're a bank, you can buy treasuries over there, U.S. treasuries, or you can put it in the bank and give 0.25% back to the EU. They're going to buy bonds for any cash that they need sitting around, and I think that's just going to move more cash this way. And people, if they're investing, will probably look at investing over here too. Anything to get out of somewhere where it is problematic to actually keep cash. But just my thought so far is that exactly what they're going to do is going to chase the cash out of where they want it to go to work instead of into. Music royalties, as we watch markets moving around, Justice Department will be starting to review today how much services like Pandora and Google Music must pay to license music. And of course, now Beats and Apple. But I wonder if they knew this was happening, and the fix is in from Apple for going ahead and buying Beats. Pandora has loudly criticized the current system, saying it pays out overbearing 49% of its revenue for licensing costs. Unfortunately, a lot of people with 1 million plays of the record would get $350. That pretty much works against, if you had 1 million people listen to your song on FM radio, you'd probably be getting about $2,000. And of course, a lot more people listening to music, but every time you turn on the FM radio, you hear a song played, you're probably seeing a quarter to 75 cents go to the recording artist. It's more like half a penny when it's streamed per person. Of course, a lot more people on streaming services, but listening to just a handful of music out there, making it extremely narrow of the people that make any money at all. But almost all of them are making none when you look at it. Even some of the bigger bands of the 80s that you would think would be making huge cash will get a check from streaming for $3, $4, $5,000 a year, and we'll get 50, 60 G's from the music that plays on FM radio. So it is what it is, but I just don't understand how streaming music is supposed to work unless musicians decide just to give away their music. And at the very end of it, I don't know if the Justice Department will decide that just because it's a horrible business model that artists should give up what they play. Netflix is striking back, the revenge of the Netflix. Verizon is also striking back, saying Netflix PR stunt that denigrates its network quality. But last night, Netflix began testing an error message telling users that congestion for the RSP was hurting their service quality. The Verizon network is crowded right now, one said, and message was showing during buffering. Of course, Verizon says this has nothing to do with them, and it's just a big political move for Netflix. But I have seen this error, and frankly, come Sunday nights, very tough to get Netflix rolling in this household, even with the giant honking connection I have that is probably 10 times faster than just about anybody has at home. So I can say that, and it is with Verizon, saying that I pay for their highest level of service, actually a business line at a residential site, and I still can't get it. It tells me that Verizon isn't living up to the money that they're paying Netflix. Anyway, we will be back in just a minute. And what can you say?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're going to go right to Janet in British Columbia. How are you doing today, Janet?
Hi, David. Well, not that great.
Okay.
I thought there'd be more volatility in the market, so I took a position in the VIX, actually UVXY, and now down. And so I wondered whether this non-farm payroll thing coming out tomorrow, will that affect any volatility? I'd like to kind of get out where I got in if I could, but maybe I should just cut my losses and get out.
That's what I did.
That's what you did.
Yeah. It's there was every indication that we should have blown out and headed it down today. That we did not. That the dollar index backed up tells me I was on the wrong side of this market.
Yeah, it looks like I was too.
So other than that, there's always another trade, and I'm starting to.
That's right.
I was going to get into that later, but I'm starting to look at stocks that probably can't go any lower, or probably won't go any lower. And I think in the next round here, we're going to have a little rotation, and a lot of these dollar stocks that are extremely hated now are probably going to have some big runs in them over the summer. But that's normally the pattern when we get into light volume trading in the summertime, especially late summer. And I think we could see that this summer. So I'm starting to nibble at some stocks and find some stocks that are down and just been beaten to living death.
Right.
And those are probably what I'm going to be sitting on. for this summer.
What about this non-farm payroll number coming out tomorrow? They say that might be bearish for gold, but are the numbers going to be good on that?
I think they're going to be in line. I don't think there's a lot of surprise from what I saw in ADP and the rest of them. So I don't think it's going to move the market at all.
No. Okay.
I think we're going to stumble up way probably into the 4th of July, 2, 3, 4 points, just like we've seen all week. Normally when we come back from a 3-day weekend, you're going to have a pattern or a market with a character. And that character has been just to close up 2, 3, 4 points, sell off early in the morning. By 10:30, the buyers are back. There aren't many of them, but they're enough to drive it up 3, 4 more points. And, you get that probably for 20 more trading days, 2,000 on the S&P cash.
Yes.
So my belief right now is that they're, especially after Draghi moving, is that we're going to have more cash moving over here to the United States, not less.
Yes.
So at least that's my call at the moment. I don't think we're going to write anything home. I'm not going to be going long the S&P or any of these others, but I am going to find stocks that are, have their backs against the wall and have just been totally beaten up, and look for a back into those and into some risk taking as we go into that Alibaba IPO, which is probably going to be late August, 1st of September.
Right.
So for every technical reason this market should sell off, it did not. It should have today. It did not. We should have seen 30-point move or $30 move in gold today. We did not. Should have seen crude really get hammered. We did not. That's telling me that we've got a market that's probably set for at least until that 4th of July holiday day, and then I'll reevaluate. But I'm pretty sure we're probably going to just stumble up back and forth probably for another 30 days as that cash exits Europe and heads this way.
Yes. Well, that makes sense, David.
And well, it doesn't make me any dollars, but it does make sense.
Nor me.
well, it's I made a great deal of money on that VIX trade and given back a little of it twice now, but only about 25% of what I made. So that's not going to be uncommon trying to be short a market. But when you are right, you make a great deal of cash. When you're wrong, hopefully you don't lose anywhere close to what you had. And
if it's any consolation, there's someone out there suffering with you today.
It's no consolation. It doesn't do me any good. It doesn't pay the bills. But one of the things I don't do typically is put all my cash in one position. So I'm going to go over one that I just covered during the last break here shortly or before the end of the show. So some of the ones I did lose, some of the ones I did well. I didn't have an index position. I just had that VIX trade. But we'll see the rest of it. Anyway,
right.
We'll go. Anything else?
Have a good day. No, thank you, David.
Okay.
Have a good day.
Bye.
Bye-bye.
Anyway, we're talking about Netflix and Verizon. Not a lot happening in there. Interestingly enough, Apple is one of the few stocks that wasn't moving at all today. It's up $1. And before, 90% of all the index movement had been Apple over the last few days. That we're seeing that Apple is up only $1, yet the rest of the market's up, is again telling me that we're at least having some cash come in a more broad sense in the marketplace. Interestingly enough, of course, if you've seen their ads over the last 2 days, they've got a great deal more ads running. And these ads are in-house. They've become their own Mad Men, per se, if you like that show. I never watched it. Just looked like a bunch of people drinking and fornicating and throwing things and having problems. More like a soap opera. I don't watch many of those. I like The Walking Dead. I like those kind of things. People getting chased around by. Anyway. But it's going to be interesting. It's the first time in about 20 years Apple has done its own internal ads or come up with the ideas for them. And doesn't have the guys out there from the ad space really putting a lot of input into it. You can tell that they are different in what they are. And I certainly like Peter Coyote's voiceovers, especially over the last few years. Kind of miss them a little bit. But that's it. Of course, GM, I think I had some audio of her conversation, the CEO, Mary Barra, this morning. Let's see if I've got that.
I'm sorry.
Yes,
so sorry.
That's, I think, exactly what she had. This, pretty much all she had to say here today on General Motors. But it's going to be interesting to see how the stock plays out. I didn't think that they were going to have some kind of giant investigation that pointed fingers at everybody at General Motors. My guess is that that when they saw this coming, they gave her the job as the piñata over the next 6 months, and they'll probably move her out if she doesn't consolidate power fairly soon. But I think there was a reason why they were getting rid of that CEO last time. And the belief that he didn't know about it, I think, is probably pretty tough. I think that she probably got the proverbial bag of excrement tossed to her. But, of course, they said that they are ousting 15 executives and key employees. And, of course, the lawyer that basically said to do nothing. And I think that was kind of interesting. But what can you say? It is a mad market. And we're going to go start looking at some of those charts in the market somewhat. I had a question about IWM and where it would retrace. To tell you the truth, this thing looks to me like it's going to go up and test 115.02. And we've got plenty of volume out here today at 43 million shares going up against 40. So we're already into that candle. We got higher volume. Another reason why I have a feeling that we're probably going to go higher, and probably a good chance that you could see 120.58, which is the next big move out here, our next big peak, and probably see it, I would imagine, late this summer maybe. We could move a little faster than I think, but my guess is that we probably see 1,200 on the S&P cash come July the 4th, or as we go into that weekend. I had some stocks actually moving. One was Joy Global, and it is up huge. And if I remember right, this was on earnings this morning. Let's see. Man, beat on earnings. And what else? You got all the volume you need, I think. See, net sales of $929 million, down 31% from a year ago. The decline was due to lower contribution from underground mining machinery, i.e. coal. They should have said surface mining equipment is down 38%. Softness in demand persists in the global mining market. Net sales surpassed ZAC consensus forecast of $924 million, though, marginally by just about 1%. And that's all it took on a highly short stock. And we're seeing that today. And, of course, you really need this thing to get 3.6 million shares. Pretty much got that already today. Not holding that high, but for a stock with a high short interest, that is it. Broadcom, of course, they've been talking about their strategic initiatives, another stock that had been moving fairly quickly out here. When we look at this, basically three soldiers probably going to top out here today. Let's see if we can get a little longer look at Broadcom. It's back up at its previous high and higher volume. You wanted more than basically 10 million shares from the May 20th high of almost a year ago now. So 37.85 with 9.9 million shares. We've gone over that today with 11 million shares. And why the energy wasn't real great, all it took was them saying that they're ready to be sold, and that was all. I don't know exactly who would buy them and who would pay that much for them, but it is interesting nonetheless. MTZ, Maztec, this isn't doing anything. wonder why this is on my list. And Protective Life Corporation, probably the big winner out here. Probably no one's heard of this at TFNN. I don't know of anybody that has anyway. PL is the symbol, but this thing is kind of like that Tyson's Foods. Just can't stop getting offers out here. It's had its second big gap up and away today, but really looks like people are going to be making a lot of moves up here to get this life insurance company, which seems rather weird, but it is. Okay, what else do we have? I wanted to see how some of these stocks were challenging its highs. ABBVIE, ABBV is the symbol on this one. Wanted to see how this thing came into the highs. Certainly there are enough stocks out here that we are going to have a market of stocks, and probably not a stock market if you understand the distinction. And that is, like I said, I'm probably not going to be playing mini indexes or volatility, but probably individual stocks, mostly because we can see a great deal of these stocks are in trading ranges and hitting highs. You certainly want to see at least 10 million shares today, like the December 16th high of 54.78 on a BBVI. And today, you basically going through it with 3 million shares, rather problematic. So there are stocks out here that are going to be in bigger trading ranges. This is one. The energy wasn't all that bad on the way up. It was 20% lighter. So not a big surprise that we are seeing a test up here with lighter volume. AIZ, another insurance company, another one up here with very light volume. You wanted to see some kind of breakout on it. Assurance. You had two previous highs at this price range. January 8th high at 68.95 at 1.7 million shares. You got 1 million shares come March 11th at 69.26. And, of course, the last 2 days, 412,000. Today, basically 500,000. So I'm looking at these kind of moves. It's going to be without a lot of volume. Even if you get a pullback, you're basically setting up a chance to go higher. Let's just check the market real quick and see what we've got for a S&P up 13 points and 2.10. I'm going to call it 2 billion shares. So not a big volume day, but doesn't look like anybody's pulling back here. You can also be like others and give me a call at 877-927-6648. And Conway, I believe this is the trucking company, another one I've been watching out here. Talk about light volume. Major high out here on August 2nd of 2013 was $49.52, 2.9 million shares. And we've got 208,000 today. There's no volume in a few of these stocks out here. These are the ones probably I'm going to be playing as we go through this market. I did say I had one that did very well. I covered it during the break. And it still looks pretty good out here. Let me see. I'm going to look at that when we come back. Also, warming up in the bullpen, I would imagine, is Andy Heck. And we're even going to get more of Andy Heck tomorrow. We'll talk about that when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, if you all remember the Monty Python movie, The Holy Grail, the Black Knight got his arms and legs chopped off, only to say, run away, it's just a flesh wound. Well, Andy is in a similar condition today, so he told me to make sure that you all treat him with some TLC today and give him a phone call, because he needs to get through that show not feeling at 100%, probably 100% better than me, but probably only at 99.95%. And we'd tell that. We'd be able to know. But make sure and give Andy a call today. He'll be on in just a few minutes talking about that. He says he's got a full show ready to go. But I'd be interested to see how he thinks about how the dollar index moved with the Draghi comments today, how gold and silver and crude. To me, the market is not acting right to move lower, and that's why I acted today. We were talking today that not all my trades went the wrong way. One of the ones we had earlier this week did it very well. I discovered it, told everybody else to cover it today. It was at Cons. This is the company that is kind of like a Best Buy. It had just a huge slam down. I love these patterns, but it got back up into this gap. Really had I could watch it that intraday on the second, where this ran all the shorts with no volume for the last $2 that went up, or $1.50. But really looked pretty good. We took that short at 49. I think I got 49.60 or 49.70 for my fill, something like that. But excellent test of the previous high. Went through that 48.37 that had 4.3 million shares. It had 2.8 million shares, but really looked to me like it was just a short squeeze. I've seen a lot of these in other stocks too. So we might be seeing a lot of stocks that are probably closer to their highs than you would think. Why I'm thinking that we're going to get some rotation to these penny or cheaper stocks over the summer. But certainly this pulled back into the bigger candle that had a lot of volume. Normally I'll give a short like this 3 days before the volume comes up. I really wanted to see that volume today, didn't get it. So we went ahead and took our cash, but not a bad trade out here. What is it trading out here at now? 45.41. And, it's not a bad deal out there. Nice quick trade, made some money to offset some of the ones that didn't do so well. I had one that was that went the opposite way, TPX. We'll take a quick look at that. And you can see where if you watch the center day trade, there was no volume to really speak of till late in the day. But we lost a couple bucks on that one. Got a few bucks back on the other one, so not too bad. But not a lot of follow-through when you see these stocks go through previous highs. But we do have some stocks breaking out. You'd like to see some significant volume, and I'm not seeing it, which makes me think that we are going to have that rather incremental market. Drip, drip, drip. Some people have called it the paper cut. It just mostly on the way down, but I have a feeling we're going to have that on the way back up, where we just kind of stumble up a few more points every day. This is probably one of the bigger days we have, but I have a feeling we're just going to stumble up into July the 4th now, and maybe we can find some stocks that have been crushed, as we have Jaws coming up for the next hour. And we'll be looking for Andy, and maybe you'll even talk about having an extra hour of Andy tomorrow. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.